I would like now to pass the microphone to the moderator for the first panel, Jean-Baptiste Sue, who's a columnist at Forbes magazine. Jean-Baptiste, the floor is yours.
Thank you. So thank you all for coming, and especially take time from your busy schedule. But all I can say, this is going to be worth it, because we're going to talk about some really interesting investment opportunities in Canadian startups. So perhaps to start, I'd like to ask my esteemed panelists to introduce yourselves, briefly, and so who you are, what you do. And perhaps we can start with Dina.
Sure. Hello, everybody. My name is Dina Santos, and I'm the head of our Canadian Trade Commissioner office in Palo Alto. And we have a small team posted up here on Lytton that focuses on helping Canadian tech companies with their business development needs. So basically, we help them connect with local contacts, multinationals here, venture capital firms, to try to broker some sales, technology partnerships, and venture capital financing. And we also help local companies open up offices in Canada, and we've been quite successful at helping multinationals here and up-and-coming local startups open up R&D offices, in particular in Canada.
Can you give some examples of those companies that you helped set up shop in Canada?
Sure. So I'm going to talk to you about the ones that have gone into the press. But for instance, we had introduced for a venture capital opportunity Password Box, which is a leading password technology firm out of Montreal, to Intel Capital. But the deal was so strategic that it turned down into an acquisition for Intel Security, and it's creating 60 new jobs in the Montreal region as of the acquisition was in last quarter of 2014. And we're very proud of that because it's all about creating economic growth in Canada.
My name's Greg Cause, and I'm here from north of you. I'm from British Columbia. And I represent the BC Innovation Council. Now, the BC Innovation Council is a Crown agency, so it's a part of the government of British Columbia. It's about 39 years old now. What originally started as the Science Council of British Columbia, and our mandate is to help entrepreneurs and early-stage companies get going. So the biggest thing that we do in British Columbia is we run a series of accelerators. We have 13 accelerator incubators with about 200 companies at any time. And because we're sort of a neutral party that doesn't have any vested interest in typical outcomes, we tend to be the place where other accelerators, venture capitalists, and people who just want to learn about innovation come and tell us their dark secrets. So I would particularly like to invite you all to come up and visit me in British Columbia, because I can help you get oriented within the province and perhaps even curate some of the opportunities that might be available to you. Yeah, we're only a 2-hour flight north, although I learned today that the drive is also 2 hours to get to the airport, so, so 4 hours.
All right, thank you.
I'm Nick Furneaux from the Government of Ontario. I work through the Ministry of Citizenship, Immigration, and International Trade, and I deal with attracting risk capital to the province. And it's a relatively new program for the province, where what I'm trying to do is encourage investors of all sorts, be it angels, be it VCs, be it whoever, as long as you have money, to come to the province and explore what we have to offer. And one of the things I do is, along with my colleague Stephen Thompson, who's the redheaded guy over there, who's based here in San Francisco. We'd like to see if we can encourage more attention to come to Ontario in terms of looking at what we have to offer. We have quite a bit, and I'll get to that in a bit. But one of the things we're really proud about in Ontario is the level of entrepreneurship and innovation, and one of the things that the government would like to see happen is to encourage more investment into that. So that's why I'm here.
Yeah. Michael?
My name's Mike McCauley. I'm a corporate finance and M&A lawyer with Gowlings. Gowlings is a national law firm in Canada. We've got about 750 lawyers and professionals in our various offices located across the country and all the major tech centers, including in the Waterloo region where my colleague Fiona, who's here with me today, is based. I myself am from our Vancouver office, and my practice is largely based on the tech sector, representing both startups and VCs and VC investments and in M&A.
Thank you, Mike. I'm Matthew Champagne, as Jean-Baptiste mentioned. I'm from Montreal originally, but moved to Vancouver 5 years ago for the opportunity. So I'm with Deloitte. I'm the tax leader for BC Technology. It's an industry focus we have at Deloitte. So we obviously, Deloitte focuses on accounting and tax, but we work with startups and the company right from cradle to grave. I guess in the BC environment and also in Canada. So looking forward to talk to you all tonight.
So I think with this panel we have we're going to have all the information to that we need to invest in Canada. So before we start the Q&A, maybe a short presentation from each of you, and I think Dina, that's your slide.
Yes. Yeah. So my apologies for the long text, and a lot of this data is known already to you, as a lot of you are Canadian and have been exposed to the Canadian market. But really, key takeaways for the U.S. venture community to look at investing in Canada are basically fueled by Canada's diversified economy. And at the end of the day, from a business standpoint, our costs are 5% lower than doing business in the U.S. So, from a cost perspective and a stability perspective, we're, leading among the G7 countries on that front.
Did you say 5%?
5% less. On the tax advantage front, we've really maintained over the last couple of years to try to keep a very diminished and reasonable combined federal-provincial taxation system. So on the corporate taxation front, we are an average of 26% on the corporate tax rate, and that puts us at an advantage of being 13% lower in points compared to the U.S. So if I continue to drill down my points and build the Canadian business case, a third point that has really been a leading, fueling the Canadian innovation system is our great advantageous R&D taxation system. So in essence, for companies trying to conduct R&D in Canada, we offer them 30 cents back on the dollar for their activities. So that's been a really great incentive in that regard. The fourth point is our access to talent, and our Consul General talked to it a little bit earlier in her welcoming address. But essentially, we've got great universities and great talent coming out from provincial, all of the universities across the provinces, including British Columbia, Toronto, Ontario, and Quebec, which are universities that are quite active down here. And if I think of Waterloo as an example, they're kind of being referred in the press as the MIT of the North. And they are very active with a couple of other universities out of British Columbia in co-op programs down here. They have over 400 students every quarter down here, and they've they've been great at being able, they've been great test beds for local multinationals to try out the workforce in Canada. And really our ecosystem, Bernard touched upon it a little bit earlier when he was kind of breaking down the startup genome, but as an example for Waterloo, there's over 700 startups at the present time in the region, 1,000 technology firms that have contributed over $30 billion to the economy, as an example. And many other cities like Toronto, Vancouver, and Montreal in particular are also great examples of the contribution of the startup community and the growth of the startup community in Canada. My last point is more on the Government of Canada making investments in private sector. So for the VCs in the room, particularly the Canadian ones, you've all heard and benefited most probably from the Canadian Venture Action Plan. So it's essentially our government in early 2013 set aside $400 million to try to invest in the best fund of funds in Canada, the best LPs, and the best incubators. So that's been trickling out. The federal government has had some matching funds from the provinces, including our colleague here representing the province of Ontario, and that's been fueling the economy. And we've also recently launched, in early 2015, a investor program, which will give back about $100 million to the startup community. So we'll be welcoming investors using their money or forcing them to invest in startups in the amount, Canadian startups in the amount of about $100 million.
Great. So a lot of talent, low cost structure, and government incentives. What not to like? So next, Nick.
Okay, well, Dina stole a lot of my thunder. So.
All right, so next.
Sorry, I am a lady at the end of the
Sorry.
Ladies go first.
Anyway, so I just wanted to give a brief overview of the province. And forgive me if this is just a lot of numbers and boilerplate information that you may have heard of before, but I'm wanted to give you an idea of the size and opportunity that exists in the province. So Ontario is the largest province in terms of population in the country. It's got a population of 13.5 million, GDP of $675 billion. Toronto, which is the capital of Ontario, is now, I believe, the fourth largest city in North America, with a population starting to reach up to 6 million, and home of the major banks of Canada, and is basically one of the key hubs of the North American economy. The education system, now we're rather proud of the innovation economy we've developed in Ontario, and there's a lot of success there. And part of the reason for this is there's 44 universities alone in Ontario. As Dina mentioned, University of Toronto, which is a highly accredited university with a lot of patents and globally ranked. And the University of Waterloo, which, as Dina also mentioned, is sort of referred to as an MIT of the North. There are 65% of adults in Ontario have a post-secondary degree. Half of all R&D personnel in Canada happen to be from Ontario. And I could go on and on with a number of stats like that, but I guess the point being that Ontario does have a very, very healthy research and development establishment, and this is actually trickling into an entrepreneurial culture that has been developing over the last few decades, centered around Ottawa, Waterloo, and Toronto. There's a number of benefits for doing business in the province. There's generous, and Dina did touch on the federal aspects of this. Ontario does match a lot of these tax benefits, so that the cost of doing R&D is one of the lowest in the G7. So, example, $100 devoted to R&D in Ontario through tax credits is reduced to somewhere between $37 and $61 per $100. And what this has resulted in is a number of stats that we're actually quite proud of, most being that Ontario is number 2 IT hub in North America. With 30,000 STEM graduates per year. That's not so surprising. But it's 15% lower business costs in Ontario as well. That actually also brings that about. In terms of life sciences, we're 5th in North America in terms of life science establishments and 6th for employment. And a lot of this is centered around Toronto, where there is quite a very healthy biomedical research establishment. I would just want to say also that part of the other reason why we have a very good innovation economy is due to what we call the One Network, which stands for the Ontario Network of Entrepreneurs. Such places such as Mars, and Salim, who's here from Mars, there he is, way at the back, is one of our very, very great accelerators or incubators, which are developing really top-rate startup companies. And Communitech, which is based out of Waterloo, is another one which is very active. They seem to be down here a lot. So they have the companies with them to sort of market, and companies you see at the end there are examples of very recent, like people have talked about Shopify, Desire to Learn, which is an education solution. Nope, sorry, that is a integrated learning platform, is what they call themselves, and they were able to raise $85 million in 2014, as an example. And just the venture capital environment in Ontario is better. It's not the best, but it's got a pretty healthy environment with 142 companies doing active deals last year. The Ontario government actually sees itself as a partner in the innovation ecosystem. And an example of this is we have a couple of programs where we've actively tried to usher in investment money, one being the Ontario Venture Capital Fund, which was a fund of funds developed in 2009 and raised, I believe, all told in the end, 320 million Canadian. And the follow-up to that is the Northleaf Catalyst Fund, which I unfortunately don't have the numbers for, but it's a very similar endeavor, and that's a partnership with the federal government and the provincial government. So I'm going to leave it at that for right now. And I'm just going to also include the fact that my job is to act as a concierge to the province. Again, we see ourselves as a partner, and one of the things I do for the province is, if you were to get in touch with me, I can introduce you to various companies, researchers, whoever you need to meet, whoever you're interested in meeting. That's one of the jobs I do, which is to sort of give you a guide and act as a guide to the innovation economy of the province.
Great. So we're gonna help you pass that $1 billion mark in VC funding for this year.
I'm gonna hold you to that.
Yeah. Don't hold your breath, but if you're a good concierge, it's always that's what happens. So Greg, next.
Thanks very much. That's me. I don't have a tie on, but it is actually me. They always make you take a government picture because BCIC, being a Crown corporation, it's super important. Nobody here from the BC government, right? Oh, no, there is? Okay, well, don't report back. Whatever you do. Well, look, I'd like to thank Bernard, and I'd like to thank the C100 for having me here, because C100 Canadian expats, if you want to call it that, have been instrumental in helping drive stuff into the community in the north. So I just want to shout out to them. We've been a strong supporter since the beginning. Now, most of you will know about British Columbia because apparently it's the best place on earth to live. That's what we brag about anyways, but it is a nice place, and I must say that livability has driven a lot of what goes on in Vancouver and in British Columbia. Companies tend to stay there because it's pretty hard to move outside of there. Now, you'll know that TED actually moved up there. It's had 2 years there, very, very successful, gig, I'll call it. We also had the Olympics there in 2010, so the infrastructure is very, very, very mature. If you haven't been to BC, it's only 2 hours north. Just hop on the airplane. It's in the same time zone as you, and we're on the left coast, just like you. So a lot of the same sort of culture as California. I think it's a natural place to look for you. I would like to echo what the Council General said. We do have a lot of talent up there. We've just had Sony ImageWorks move in with taking about 300 employees in Vancouver. Microsoft just moved in, and you'll see there's a whole bunch of the other usual suspects up there in Vancouver. There is a lot of talent. We've got 25 universities, so we can't get close to Ontario, but we're trying. There's just too many mountains, so you can't build them on that stuff. One thing that you might be interested in is I think there is a lot of opportunity up there for you. There was a program called the Canadian Accelerator Incubator Program, the CAPE, which spread out $100 million over 5 years to accelerators and incubators around Canada. And British Columbia took 35% of the money with only 12% of the population. So we've got a lot of, yeah, it's a huge opportunity, and I think we're sort of underserved. We have a lot of angels there. We have some super angels, not a super lot, but certainly we need to bridge the super angel to A round gap. And the CAPE money is actually designed to help do that. So I think you're going to see a lot of companies popping out. Now, I have 13 different accelerators myself that we run around the province with about 200 companies in them at any time. And when I talk to my counterparts, what's that? Yeah, it is awesome, yes. We have about 1,500 companies up there, I figure, that you should come look at. So similar to my colleague here, give me a call, because I've already been working with VCs from down here to set up so that you can talk to 4 or 5 companies a day and make it back and sleep in your own bed at night. So it's a good thing. Okay, so on to the slides. Right.
I thought that was a slide.
Yeah, all right, maybe that was the slide. Look, we've got all sorts of good ones. I was at the University of Victoria, who bestowed an honorary PhD on a fellow named Stuart Butterfield, who was a founder of Flickr in Vancouver, but he actually is a Victoria boy, which is on Vancouver Island. And we're very proud of him. And when he was there, he was talking about how he was raising his latest round, and it was $1 billion round. And he was saying, well, I just kind of picked a number and made it $1 billion. And we thought, okay, that's great. And then I read in the newspaper about a month later, no, it's $2 billion now. And now I'm reading it's 2.8 or something. Just to say there's some really, really powerful entrepreneurs up there. And I invite you to come up. That's my story.
Great. Thank you. Mike.
Great. Well, these guys have all kind of covered a lot of the benefits of investing in Canada, the strength of the ecosystem, the strength of the talent, the strength of the companies that are out there. And I guess some of the points I wanted to raise are more to kind of try and dispel some of the myths, maybe help people get over the fears of investing cross-border, make it a bit less scary, and just kind of talk a little bit about the legal system and some of the issues and or lack thereof, I guess, and how easy it can be to do a cross-border deal, and how familiar it can feel to people, and highlight that there really isn't a need to kind of for Canadian companies to make, as Bernard put it, the case for the Canadian model. Companies headquartered, incorporated in Canada, remaining in Canada, and raising money in the U.S. Certainly in Vancouver, a lot of our startups are looking south to the valley to try and raise capital. For us, it's same time zone. It's a shorter flight than going out to Ontario or going back east. So it really is the big focus for most of the tech startups in the Vancouver ecosystem. So one of the first points I wanted to raise and make to you is it's a very, on the legal side, it's a similar system to what you guys are dealing with down here. It's a common law legal system other than Quebec. We'll leave that aside there. As with most things in Canada, an entirely separate kettle of fish. It will be nice. I mean, they're great, and there's lots of great companies there as well, and it's a very strong ecosystem. And I'm sure if I had some of my colleagues from Montreal here, they'd
And they have great food.
have lots of other things to say. But we'll leave it aside for this purpose. It is they're a civil law system. It's the only jurisdiction in Canada that is a civil law system similar to much of Europe. So it is a little bit different there. Outside of that, the rest of Canada is a common law system built on the same kind of foundational legal principles that you guys have down here in the U.S. You're dealing with contract law, tort law that has evolved out of the same line of cases historically, very similar principles. The law is different. I don't want to dissuade you or persuade you to think that it's the same and a U.S. lawyer can lead the Canadian deal without stepping into some issues. I've seen that happen too many times. But it is very similar, and with the right Canadian legal counsel, I think you'll find the experience to be very similar to doing a deal in the U.S. and quite familiar. In Canada, in terms of corporate law, most Canadian jurisdictions have modern, flexible corporate laws. They're not wildly different than what you guys would see in the U.S. A lot of things have been modeled on principles that you guys have down here. They are corporate systems that are set up largely to make things modern, easy, not be over administratively difficult. You're not looking at a lot of time delays and lags for filings like you see in some other jurisdictions, where I've done deals where you're making filings and waiting 4 days for a registrar to approve something before you get your articles. I mean, none of that. It's all quite quick, seamless, easy to deal with. There's broad shareholder protections that are in place, although not going so far as to having kind of embedded preemptive rights, again, like you see in some other foreign jurisdictions where it's causes additional delays while you're seeking extra approvals from shareholders. I think in general, in most cases, the level of shareholders approvals that you're seeking, at least under corporate law, is not wildly different than what you guys would see in most U.S. jurisdictions. In terms of other shareholder protections that are there, as I said, they are quite broad. There's broad minority protection rights that are in place, like the oppression remedy that allows minority shareholders to exert their rights quite freely. It's a very broad one. It is easier in Canada for them to also force meetings and things like that. Although again, some of those that can be seen as additional risks are mitigated by the fact that in general, in Canada, there's less litigation risk than there is in the U.S. Due to a number of factors. In general, we've got a far less politicized judiciary. They're not elected judges. They are nominated. They are nominated for life, and as a result, you see a lot more consistency in decisions theoretically. Far fewer jury trials on commercial matters. They're almost non-existent, so you don't see kind of the curveballs in decisions where there's a jury trial and it goes to a sympathetic plaintiff. Doesn't really exist for the most part in commercial matters. Generally, far lower and less frequent punitive damages awards. So again, the quantum of damages you're looking at in most Canadian litigation is far, far lower than what you're seeing in the U.S. And also in Canadian jurisdictions, there's a loser pays principle in a lot of cases that dissuades people from bringing frivolous cases for the risk that they might end up having to cover the winning party's costs. So all of this kind of amounts to less upside for people in going into litigation and some risk that if they lose, they might end up bearing the other party's costs. So in general, you see a lot less things in Canada proceeding to litigation, and when it does, you see far smaller monetary awards. So overall, kind of less litigious and lower risk when it is there. So despite the fact there are some of those broad shareholder protections that I mentioned that might make some people a bit nervous, you don't see the same sides of awards, so it doesn't play out the same way it would likely in the U.S. The other thing I frequently hear from clients that are down here raising money is that they're concerned that Canadian counsel isn't familiar with VC deals, won't be able to do it efficiently on the paper that they want to use, and certainly I just wanted to say that's absolutely not the case. There's, as all of everyone else on the panelists here has alluded, there's a robust venture ecosystem in Canada with counsel and other professionals that are very familiar with doing VC deals, know the ecosystem, know the companies, know the VC players in Canada, are familiar with deals that are going down on in the South, know how those deals are getting done. We do deals using NVCA paper frequently. I mean, that's not uncommon for us. Most people who do Canadian deals will have some Canadianized versions of the NVCA documents that are quite handy, easy to use, and you're not looking at significant costs to kind of bring those types of terms north of the border if that's a concern. And I would say just overall, most Canadian professionals, whether it be accountants or legal counsel, are incredibly familiar with doing cross-border deals generally. I mean, I would say probably at least, if not more, 75% of the deals I've done this year have some U.S. cross-border component to them. It touches on almost every transaction we have, whether it's a U.S. acquirer, a U.S. investor, U.S. employees. There's always some U.S. component in the mix on these deals, so we're very familiar with dealing with U.S. counsel, very familiar with the cross-border issues that pop up, and usually can resolve them fairly quickly and simply.
Thank you, Mike. I guess one of our most famous saying here in the Valley, if you can't innovate, then litigate, it doesn't apply in Canada, I guess.
Right. Yeah, no, not at all.
Oh, that's a shame. Mathieu, now you're going to talk about tax. Tax season is just over for us, so give us some good news.
Yeah, all right. So I'll just put a bit more texture and I guess meat around two comments that were made earlier by the panel around the corporate tax rate in Canada. Yes, it is lower, but in the same line as Bernard was saying earlier, as most of you know, there's a lot of challenges currently on the international tax side. A lot of companies are being looked into, like Starbucks, for instance, and Amazon, as to are they paying their fair share of taxes, and so it's pretty challenging at this time to do some international tax planning. So there's a lot of pressure currently on the residency, so to speak, countries. If you are resident in a country, this is where you should be paying your taxes. So I guess one comment I would like to make is and it goes with the Canadian model we discussed earlier, is if you have the opportunity to set up a Canadian company and invest in a Canadian company and make that company the head of your future operations, you should consider it. The Canadian tax system is obviously simpler, and I speak with experience dealing with the U.S. A lot. Is simpler than the U.S. system. The tax rate is obviously way lower. And you may want to ask yourself why you want to have a U.S. company on top and to have to deal with the Canadian subsidiary and the CFC rules, which are the corporate foreign company rules or system, if you don't have to. So just food for thought. The other comment I wanted to make is around the shred regime. Obviously, you'll see on the slide there's a bit a bit more detail on the rates you can get. If you can manage to invest in a company that stays a Canadian controlled private corporation, which is what CCPC stands for, as you can see, you can get access to refundable tax credit to fairly significant number. And don't forget, there are other incentives. I don't think we've addressed them in any detail tonight, but I've got this deck here, which is like 20 pages long of investment of incentive possibilities in BC and in Canada in general. So very generous, generally speaking. Just to for some of you who may have been in the ventures game for a little while, there has been, before 2010, there was that, maybe you've heard of it, that 116 certificate requirement that was required on exit, which from what I understand was creating a bit of a problem for investors investing in Canadian companies. But that has been repealed, and sorry, not repealed, but it's been taken out of the legislation. So it's not there anymore. So an investment in a private Canadian company upon exit will not necessarily mean that you'll have to file for that certificate and get that certificate. So it's way simpler from an administrative standpoint of view. And my last comment would be around the legal system and tax. The U.S. system is very substance driven, meaning that if the intent is X and you've done legal matters, legal ways to get around it, you may end up with a problem. In Canada, the focus is on legal, even for tax purposes, meaning that if you have your contracts in place, everything is done properly, you should be able to have the courts or the CRA, which is the Canada Revenue Agency, to accept your position and your planning as such. So very different from that perspective. Legal wins in Canada as opposed to substance.
Great. Well, thank you. Thank you, Mathieu. So thank you for setting up the stage. And we're going to open for question in a few minutes. But before that, what would be sort of the downside for to set up or to move a Canadian startup to the US? I understand it's laws are similar and lots of subsidies, but investors, yes, 2 hours flight is not that far, but a lot of investors in the room, just apart from the Intel capital of the world, they usually the East Bay is already far away, and so what's really the downside to flipping or to moving a company, a startup down to the U.S.?
Yeah, it's Greg here, and I'm talking because we're the ones that are 2 hours away. But well, there's a number of things. My own companies, as an entrepreneur that I've run myself, have typically been bifurcated between the regions. And running both sides, I can tell you, it's a lot more expensive to run it down here. Not only for your employees in terms of their housing costs, food, just cost of living in general, but I guess I would say in terms of overhead as well. Taxation, legal, accounting overhead. Just generally the ecosystem is a lot less expensive up in Vancouver. The typical issue that I've run into is that people feel that, well, if they're away from me, I don't really have control, but you can overcome that stuff. In my last company, we made really good use of 6-way conferences on Skype every day in our scrums, and you can actually hold a company together pretty well by that. Now, obviously, there's synergies when you're physically together, but you've also got to consider that different parts of your company can also do different things. For example, your marketing arms might be in areas closer to your markets. If you're doing publishing or if you're doing finance, you might want to have your marketing business development over in the eastern United States, Toronto area anyways. But it doesn't stop you from keeping the substantial bulk of the company within Canada. That's my view anyways.
I'm just going to add that essentially, like, we work a lot with local startups here, and at the end of the day, it's a race for talent. When we pitch Canada to these companies, the incentives are quite interesting, but the key problem that we're helping them solve is the talent situation. And comparable to the area here, we've got really great STEM talent and also just loyal and more retentionable employees. So that's been the key driver that we've kind of seen working with companies here.
That's right.
Yeah, and I'd add one of the things that, everyone's mentioned all the various incentive programs and things that are available to Canadian companies. And one of the big factors in a lot of those programs is that if the companies aren't incorporated in Canada, or the employees in some cases aren't in Canada, you can't take advantage of a lot of the tax incentives in those other programs. So the SHRED program for R&D that's been mentioned requires you to be based in Canada and majority Canadian owned. Again, the credits apply for Canadian employees. There's other provincial programs where certain angel investors take advantage of, largely to get tax credits. You can get a 30% tax credit on an investment in a company within your province by following certain of these programs. Again, those programs require you to be incorporated typically in that province. So there's a lot of, you know, interesting little programs and things like that that you can't take advantage of if you're not incorporated in Canada. And I've certainly had a number of of companies approach me over the years who've kind of initially done the, oh, I'll set up in Delaware thinking they'll attract U.S. investment. After a few years of not, you know, the being incorporated in Delaware not being the magic bullet that brings in U.S. investors, they go, wow, my company's entirely based, you know, in Canada. All my employees are here, and I'm at a competitive disadvantage to other companies here because I can't take advantage of any of these tax credit programs. Can't, you know, every time I talk to local angels, they don't want to invest because they can't get these tax credits. You know, how do I kind of repatriate this back into Canada? And to do that's, you know, incredibly difficult. And you're looking at tax, you know, tax problems moving the assets across the border and out of a U.S. jurisdiction into Canada. And for most startups, that's just, you know, one, a waste of money, and two, typically money that they just don't have to spend on that kind of stuff.
What's the typical size of investors that you're looking? Is it more of a early stage, mid stage, late stage? Here we've seen there was what we call the Series A crunch, where there was a lot of business angels, early stage investors that were putting a lot more money than before, but then when you reach Series A, there's nobody around, and a lot of startups are getting into problems. So I guess perhaps it's area specific, state specific, but what sort of the investors, the kind of investors are you most keen to attract?
Oh, looking at Greg.
Okay, well, I'm going to go because I grabbed the microphone again. I'm really greedy. Sorry about that. One thing to remember is that you know, perhaps only 10% of companies that are growing are VCable. It doesn't mean that the companies aren't good or that they don't have great value, but VCs are typically looking for very, very big wins. I know certainly in our province, in British Columbia, we're looking at spanning Jeffrey Moore's, you know, chasm of doom or death or whatever they call it there. And that the CAPE program is designed to boost companies that have high potential up so that they are VCable, we'll call it that, which I consider billion-dollar opportunities, certainly. So, so we typically, we have a lot of super angels and angels in British Columbia, but we're looking, I would say, for money between $500,000 and $2–3 million, typically are what you're looking for to bridge, you know, a company that has an opportunity, just to put a number on it.
Yeah, for Ontario, it's very similar. We've noticed that Series A tends to be very painful for a lot of companies in Ontario. So we tend to try and focus. There's no specific focus. You know, you don't want to actually really turn away anybody, but at the same time, from my point of view, who I really want to talk to is somebody who anywhere from 500,000 to sort of 3 million Series A, and because that's actually where a lot of the companies need the most help, and that's where they tend to sort of that point where they're about to sort of break out, and a lot crash and burn at that point, I find.
Great. Any questions?
Sure, I stand. My name is Ben Levy at Bootstrap Lab. We're early stage venture investment in Silicon Valley, looking at innovation and opportunities around the world. Can you talk about the exit context, number of M&A versus, you know, IPOs versus, you know, at the end of the day, we find that angel investors and later stage investors come out of the woodwork when they find ways to return capital to their LPs or for themselves to invest their own money. So, you know, all the tax breaks in the world are exciting, but if there's no way to make your money back, it doesn't really matter. And those angels, they might be doing it for other purposes. So usually when you have returns, monies follow. And so if you could talk about that, and I think there's some good cases, but also the stats in terms of percentages. In Silicon Valley, it's 95% M&A, 5% IPOs, depending on the year. and a lot of them fail and crash in the middle before even getting there, right? So love to see some stats if you have them handy by any chance.
I think that the next panel will have some of that, and
But
yeah, go ahead.
But I did bring a little bit of stats with me. So, and the
Wonderful.
next panel can validate this, but based on some data pulled from our Canadian Venture Capital Association, during the last 5 years, there was about 183 venture-backed Canadian companies that generated an exit. 68% of them were acquired by U.S. companies and 25% by Canadian companies, like Rogers in the room. The average exit valuation was $99 million Canadian, and the average years to acquisition was 8.4 years. Top acquiring companies have included Google with 6 deals, IBM with 5, Salesforce with 4, RIM, yes, RIM is still in the play.
BlackBerry.
With BlackBerry with 4, Microsoft 3, and Twitter 3. And for 2014, we had about $2 billion of venture investment in Canadian firms, 379 deals, about 50%, 40 to 50% deal flow from investments from the U.S. So Canada has become a really attractive market for foreign venture capitalist firms, including the U.S.
Great. I'm sure.
Just a soft stat on that. I'm working currently with 3 companies that are looking at IPO in the next 2 years.
Right. So just one more question.
Hi, I'm David Blumberg, and I'll be speaking on the next panel. And a lot of things are great, but they can always improve. So if each of you could very quickly say what would you improve in your specific domain or province to make it even more attractive, what would it be?
That's a good question.
It's hard. Isn't it already perfect?
Well,
more concierge?
One thing I know Ontario has tried to do, and it's been a bit of a trying to manage a cultural shift for a lot of our entrepreneurs who tend to not think globally. They sort of will build up a company and sort of get a domestic market going, and then just be satisfied with that. And so it is a bit of an issue sometimes to get them to scale up. So one of the things the Ontario government's trying to do is institute what's called a Born Global program. And unfortunately, I don't have any information on that. But what the essence of it is trying to make sure that entrepreneurs who are quite good and are ready for the global marketplace actually make that shift. And I guess it's a very Canadian problem of just sort of being sort of humble to a fault. And so one of the things we'd like to see change is sort of getting our entrepreneurs to really up their game and sort of take on the world a little bit more.